Hey everybody, welcome back into Mining Stock Daily. Trevor Hall here, and this is your Friday morning long form episode here on the podcast. Thanks for bearing with me this week. I'm back in studio. I was without it for the first couple of days this week, no electricity, but fortunately we're back here, and we're going to try to get on a regular scheduled program here for the remainder of the summer, even though it is winding down. Today we have a long discussion with Steve de Jong, the head guy over there at VRIFY Technologies. If you are playing in these junior equity markets, you probably are very familiar with VRIFY. It's a little bit of combination of tech company and mining company. So we talk about how they kind of wade in both waters here, but also how they're evaluated, because it did go out and raise $6 million here recently. And Steve walks us through, kind of balancing each of these, but also what they're working on in the future. Some different added additions to the platform that I think are really interesting, both for companies using the platform and also the investors and speculators looking to add into their due diligence. So it's a really cool conversation with Steve. I always enjoy those with him, and he's a good buddy, and they're doing some really interesting work that's been long overdue for the resource space. Special thank you to Arizona Sonoran Copper, Western Copper and Gold, and Fireweed Metals for their continued support of the podcast. If you wouldn't mind, hit that subscribe, like, comment, all the fun stuff on both the YouTube channel here and also on the podcast. Appreciate all the feedback. Let's jump into my conversation with Steve. Have a wonderful weekend, everybody, and be well. Hey, good morning, everybody. Welcome into Mining Stock Daily, and this is this week's long form episode here on the podcast. Happy to welcome in an old friend. We're going to have a lengthy discussion here regarding exploration, junior exploration, mining, and also technology, because he's launching some new stuff with the VRIFY technology that he helped co-fund. More into that, but welcome, Mr. Steve de Jong. My good friend. Man, we got a lot to talk about.
Yeah, Trevor, good to see you. Thanks for having me.
Yeah. How are things going? I mean, it's been, despite the junior exploration markets being relatively poor, VRIFY has been extremely busy this 2023.
Yeah, it's been busy. I think so. It was 2017, 2018 when I kind of made that jump over from mining to tech, even though it's mining tech, so it's one and the same. And then 2022 came along and just wiped out the entire tech space, and it was interesting to go through, because it's almost like coming from the mineral exploration mining space. We're so used to it. We've just been kind of down on our knees and kicked over and over for years and years. And it's 2022. There was an element of like, well, finally the rest of the world decided to see what it felt like. But overall, it's good. It's and it's a fun time. It's always a fun time.
I mean, you jumped into, if you just simplify it as technology, you jumped into this tech space at a time where tech is actually really thriving. Have you felt that, kind of wind to your sails type of movement because of, everybody moving into technology at all? Or do you still kind of feel like the company's riding, I guess for lack of a better term, the coattails on mining valuations?
Yeah, it's a good question. So in 2017, on the back of the Integra Gold sale, obviously kind of feeling pretty good about ourselves, started VRIFY Technology, realized very quickly that building and running a technology company is very, very different than a mineral exploration company. Yeah. So we spent a few years there where we were really fortunate in that we were able to achieve, between sort of the tech market and mining network, able to achieve a great valuation as our business, which funded sort of this idea at VRIFY and what we were trying to build. And then all of a sudden, it was in 2022, almost like the tide went out, and we realized very quickly, we need to commercialize this product. We can't just tinker with it forever, because the market just wasn't there. And all of a sudden, both the tech market and the mining market kind of disappeared for investment very quickly. Well, the mining market wasn't really there in the first place. So when we look at that time period, And we realized that we didn't have enough capital to get our business to where it needed to be. So 2022 was a really, really tough year for us, in that it's like very quickly trying to figure out private tech finance, kind of how to fund your company and so on. And fortunately for us, it took a lot longer than we thought. But we about 2 months ago, a month and a half ago now, we closed our Series A, kind of have all the capital we need. We have this incredible product that we built 5 years or took 5 years to build. And now it's sort of it feels almost like everything's coming together. And I'm always blown away, regardless of what sector you're in. It's like anything. It's so dark at times, and all of a sudden it's not. And it's amazing. And mineral exploration is absolutely no different, whether it's a drill hole or some sort of event that changes a commodity price. And all of a sudden, instead of all these conversations we have about how bad it is and how depressing it is and so on, we're talking about, remember how bad it used to be and how great it is now. The hardest part, though, is we just never know when that point is going to be.
Yeah. So I want to little kind of progress through the timeline here with VRIFY. Leading up to this, you just raised $6 million in that Series A that you just mentioned. So before we kind of chat about that, I'd like to kind of get your understanding of how VRIFY has progressed, not only in adoption from the client's purview, but also from the, I guess, usership from everyone else outside of the client using VRIFY to kind of dig into specific projects. How has that adoption kind of transformed over the last, I guess, 5 years here, Steve? Are you seeing more of the corporate clients coming in, or do you see more of the generalist investor speculator coming in and using and becoming more familiar with the technology?
Yeah, so I think when we look at the early days, or just push it back 2 or 3 years, we tried a little too hard at VRIFY to be something for everybody. In that we wanted to be sort of this tool that the whole mining industry uses, maybe other industries would use it, everybody at your company could use it for every single sort of anything that they're presenting your project on. Every investor out there would come to our website, whether it's a sophisticated institutional investor or a retail investor that's never heard of mining, and our website would be this hub that millions of people would use, as if there's millions of investors in the junior mining space. And I think what we did was we really diluted the value of what we do in doing so. So when the way we actually think of adoption, we don't think of it as just a numbers game anymore, and that we need to have as many people or companies using VRIFY. We really sort of, the metric that we use as a business is how many successful clients do we have, and how do we define successful clients? Like, what is a successful client? Because if a company comes, signs up for VRIFY, pays their fees, doesn't use it for 6 months, it still looks good on your financials, but that we don't consider that a successful client. So when we go back, if we were to dial back, we're at about 145 clients today, and that's mineral exploration and mining companies, growing right now by about sort of 4 to 6, 7 companies a month. So it's still growing at quite a quick clip. If we go back 4 years, we had 125 clients. So, but our revenue today would be about, what would it be? I would say about 1,000% higher than it was with just a few more clients. And the reason for that is what we've done is we're an extremely valuable tool to a company that knows how to take the most of us. We're a big waste of money for a company that doesn't know how to take advantage of us. So when we actually, so long story short, we finally are at a point as a business where we've kind of cleaned up our process. And that means when a company sends us their data, we can kind of have a very efficient process to build that into something in a time frame that works for them and is a good experience. And then on the back of that, we pile on a bunch of training and other things to ensure that these companies know how to make the best of it. But instead of us trying to be sort of the place that has millions of retail investors that come to our website and see all this content, the approach we've now taken is to arm these companies with tools that allow them to take advantage of every other distribution network out there, because there's a ton of websites and investor platforms and even things like your own podcast where companies can use our tool effectively and take advantage of all those other distribution channels. like overall, we view our business as our objective is to arm these companies to unlock a level of an understanding that allows somebody to make an investment decision, because PowerPoint in itself with some geological maps just can't accomplish that. But VRIFY, a 3D interactive presentation, if not done right, is actually much more confusing than a traditional PowerPoint presentation. And so the way, long story short, adoption is such an interesting one because it's a metric we used to hold dear to our heart, and that like how many people are using VRIFY. And now it's kind of like one day we're going to focus on that, and we're kind of getting to that now. But it's very much how many people are using VRIFY and how many companies are using it well. Because the ones who use it well knock it out of the park. The ones that don't use it well, we need to kind of really help along the way so they can get to that point where they sit in, whether it's an investor meeting or a stakeholder meeting or a video interview, something like this, and the person across the table or on the other side of the call says to them, geez, I've never even seen anything like this before. I never really understood your project till you showed me it this way. Because if we can get our clients, if we can get our people to that point, then they'll never leave us.
Well, maybe it's not safe to assume, but I do assume that there are a number of companies out there that have signed up for VRIFY technology, that have provided the data, and then it's kind of hands off from the company standpoint, and maybe they see it as a way for the investor to start digging in on their own behalf, not necessarily the company's use. I mean, is that something that you would define as maybe a company that isn't using it appropriately?
Yeah, and that's that's a really good question, because I think what we used to think was, well, 3D models on websites, because these are typically used to be things that lived in like special software. So an interactive 3D model that's preset that somebody can go through with maybe some site photography and other things in itself is enough. And so we're guilty of telling our clients that in the early days of VRIFY, that put this VRIFY content on your website and somebody will click through it and they'll get a better understanding of your project. The problem with that is there's a very small group of people that actually get a lot from clicking through, say, a 3D model or something else. The nice thing is those are really, really important investors, because they're analysts at big institutions and corporates that might buy your company and other things. So they're still valuable. But the concept that somebody can just click through a bunch of 3D models, transitions, and some sites of what you're doing, or some photos of what you're doing on site, and kind of bring themselves to an investment decision isn't actually that likely. So what we've realized is that in itself you can do, but VRIFY sitting on your website is not worth what we charge for it. And it's why we started to bring in tools like the ability to, instead of sending someone a link to your interactive presentation or a link to your website, hit record within your VRIFY presentation, do a 2-minute voiceover where you're annotating and walking through and explaining, and it ends on, and here's why it matters, here's why an investor should care. That sort of 2-minute recording, which we built through our system, you can do now in kind of 2 minutes and 10 seconds, and send someone a high resolution video instead of something they have to click through. That recording is, I would say, probably 10 to 100 times more effective than just sending someone a link for something for someone to click through themselves. Yeah. And the same thing, if you and I were to sit down in this call and I sent you a link and I was just watch you click through it, that's a very different experience than me kind of walking through something and explaining it to you. And that's what the real power of using a tool like VRIFY is kind of the presentation storytelling component of it. It's not the data itself. That's the worst. And we're very guilty of that early days, just thinking that the data itself visualized in a format that you could use on your phone was good enough.
It's refreshing to hear, the head of a technology company, actually any company at all, that has launched something new, to come out and say, there were growing pains, and we know more now than we did, because we had this vision, but turns out the vision we had, it was on the right path, but ultimately it was in the wrong direction.
Yeah, that's, if we could spend the whole call, if you want to go through my laundry list of things that we screwed up in the
we have a lot of time here, Steve. I got you for a full hour. What were some of those mistakes you made? How did you cut your teeth?
So part of it, again, my background is kind of building and running a mineral exploration company.
Right.
And it's very different in that sense because first you're public, so ultimately people view success of your business as how high your share price is.
Sure.
Bar none. Like there's no other indicator. Even you could drill a bunch of fancy holes, you can do all kinds of other things. Ultimately, it just comes down to is your share price higher or lower than, which is stressful, but also kind of refreshing as well. Stressful in that you wake up and you're really pumped about your business and you look at the stock market and it's like, oh, well, I guess it's going to be a bad day today, even though all these things in your business might be kind of working. And the flip side of that is all of a sudden it's kind of when you get momentum within that, it just kind of carries you through a lot of those tough times as well. Looking at sort of building VRIFY, it was just a very different experience because ultimately it's entirely down to your ability to execute. You don't have a market and you don't have sort of, you're not drilling holes that can one day, like one drill hole with a mineral exploration company can change your whole business overnight. And in sort of building a tech platform, it really comes down to your team's ability to execute on a specific idea. And if you had that idea wrong, or kind of your vision of what you thought the market needed, or this application is wrong, it's on nobody but you at the end of the day. When we look at the early days of VRIFY, we were definitely we were very excited about just using this technology, and it was almost like the novelty of this technology in itself we thought was enough, and we were guilty of that. But the other thing that we did was we continued to build tools where we would say it would be cool if we had this, and it would be cool if it could also do this. But the problem with building a technology, especially a technology that's used in a live presentation environment, it needs to work all the time. And every time you add one of those things, you make your tech stack that much more complicated. And we did things like we wanted to add meetings. So if a meeting booking system. So anytime someone clicking through your presentation, if they said, this is super interesting, I want to meet with management, they could click a link and a calendar would pop up and it would book a meeting. And we were going to create this database of people who book these meetings and so on. So we spent like 6 months building this meeting booking system. And what we could have done was we could have just grabbed a Calendly link, and everyone knows how to use Calendly now, and just put it into our decks, and it would have taken sort of 3 days instead of 6 months of time, and also adding these complications to your tech stack. We also built an Android app, and we don't have an Android app now. So you can imagine sort of we had an Android team building an Android app that no longer exists, and sort of an early stage company trying to watch its like how it spends money. I can tell you that wasn't a good use of time and resources. But anytime you build things cross-platform where it has to work in iOS and Android and on a website, you sort of have to take the lowest common denominator and use technology that works for all three. So it can hinder your ability to develop, because it's almost like you can't get too far ahead with one if one of those groups fall behind. Long story short, there's just a lot of things we learned. I think the one thing I would say is I do think that a lot of the stuff that we did early on are probably things that someone with more tech experience would have seen.
Sure.
Because I think my takeaway in running this business for the last 5 years, and kind of we've grown from 5 people to we just have just over 60 on our team now, is that everything that you do comes at a cost. Even if it's as flashy as it is and amazing as that feature is, when you have a roadmap of things that you want to achieve, everything you add to that or prioritize in that comes at the cost of something else within that. And it's really sort of working in this world of finite resources. And that's the part that I have the most trouble with, because I get excited about everything. If you were to say right now, like, Steve, it would be really cool if VRIFY could do this, and I would use it more if this happened, I have a really hard time not getting excited and going back to my team and saying, like,
right,
one of our users thinks we should do this, let's move it to the front of the line.
Yeah, I guess because you're a private company, people would be maybe astonished to see your return on capital those first early years compared to what it is now. There's some growing pains obviously there to go through. Was there a time, I guess I wanted to ask you about this and follow up on this Android thing. So there's no Android application for VRIFY right now?
There's no difference between using a native Android app, which is written in a code that uses Android and just using it within a web browser on an Android device.
Okay.
So it fully works on Android. There's no, what I should say, there's no benefit to building it the way we did. Yeah, iOS is different because, as you know, people use VRIFY in meetings. So we have an iOS app, but that's strictly for iPads. And what it allows for is to download it, connect them in Bluetooth, and a whole bunch of things you can't do in a web browser. So we have an iOS app, but there's zero benefit to us having an Android app, because if somebody sends you a VRIFY link, you just open it, opens in Chrome, whatever is sitting in your Android device, and works the exact same.
Okay. So let's fast forward to now. You closed that Series A financing, $6 million here. I'm sure this was a very unique financing for you, because you're used to running junior equities. So talk to us about, why do you wanted to raise this capital for the company, what it's being used for, and how is, maybe from your words, how is completely different this go around than what maybe you're used to running Integra Gold?
Yeah, so public markets are so different, especially when you get to critical mass. So, and by critical mass, I mean you get to a point or a market cap where you're raising enough money where sort of the investment banking ecosystem cares about you. So the beautiful part about being public and working with investment banks is that there's a network of support there almost, right? It's if you need to raise capital, you kind of use your sort of, whether it's the investment banks that cover you, your network, and not all the time. You do this in private placements as well, but for the most part, they come in, sort of their sales team, their bankers, their analysts, everyone kind of rally behind, help you raise the capital. Usually, ideally, it's sort of a 2 to 4 week process, and you as a leader of your business get to go back to running your business. Private is just, we were fortunate in the first 3 years of VRIFY, we raised sort of $12 million or so just using our network. So sort of high net worth individuals, mining companies, just people from the mining side, not from the tech side. And a lot of that is the market was pretty good. The tech market was flying. It was just easy to have those conversations. And for the most part, they were pretty quick conversations. 2022 is different because mining sector is on its knees, or just not doing as well. People don't have as much just money laying around. So we had to make this transition over to let's look for tech investors. But 2022, the technology was just getting absolutely clobbered. And so we had to start from scratch, and all my experience in raising capital for public companies didn't really come into play, because now it's the playbook for private tech is much more, hey, this person knows a person. I'm not that into your company for whatever reason. It doesn't fit my profile, but I know a guy or a fund or someone, let me make an introduction. And it's this, you don't have sort of like your investment bank to take you through the process. And it's really good because you get to know investors firsthand. The problem with it is when you're trying to kind of just keep your business afloat and everything else, it just takes a ton of time. And you don't really, the one thing I've always enjoyed about sort of working with investors alongside someone else is you have a third party there to get feedback and sort of all these other elements from those conversations. So I think I probably showed up for my first 10 or so VC pitches just looking like a complete moron, because don't know, like you're trying to create a deck that fits like the profile for what a tech fund wants to see. Long story short, realized pretty quickly that like we need capital now. Our business, we still burn a lot of cash, even though we're growing really, really quickly. Mm-hmm. And this whole process is not 2 to 4 weeks, it's 3 to 6 months. And that was sort of this wake up call, like, oh shit, we need to really kind of get on this. So we accelerated a whole bunch of conversations. We were really fortunate because our revenue was skyrocketing at the same time. So we had this one, that was sort of our wild card or kind of ace in the hole as we went through this process. Because if that wasn't happening, I don't think we would have been able to raise any capital. Funny thing is, after all of these conversations, this entire process, the two sort of co-leads in this financing ended up being RCF, Resource Capital Funds, which is I think it's a $6-7 billion mining fund that has a mining technology component to it, called Jollymont, who've just been an absolutely incredible group to work with. And the other co-lead was BD Capital, which is sort of Ryan Beatty out of Vancouver, which is sort of real estate, technology, and mining, and kind of a big mining investor and some names that you know well as well. So after that whole process, we ended up with two sort of mining technology groups, and they've both been absolutely incredible supporters. To your question about what we're using the capital for, it's really like our business. We now, with this raise, have visibility at our current growth rate and everything that we're doing to get to a point where we're cash flow positive, which is, and at the same time, like typical companies or tech companies are often, you hear about different ratios, like what's your, like how much money do you spend on sales and marketing to achieve your growth rate? And then how does that equate to like how much you charge clients? We're very different because often you'll see like maybe it's for every developer you have two salespeople or two people on your sales and marketing team, or maybe it's 1-to-1. We have a 60-person team at VRIFY, and we just hired our second salesperson. So we're extremely efficient on that side of it. So when we look at how we use this capital, it's starting to put more money into sales, marketing, ensuring that the whole world knows what we're doing. And also we have a 20-person development team, and their entire job is to kind of continue to push our technology forward. There's some really kind of new cool things we're working on, but also we want to get to the point where our entire business is someone sends us data, and within 24 hours, they're looking at a fully updated, brand new 3D presentation. And it's not there yet. And that's where we're putting a ton of our time and energy and money. It's just to make that process the most kind of delightful experience for every client.
Yeah. I mean, I'm really glad that you have great partners that came in for this financing here. You mentioned the RCF Jollymont and also BD. I mean, but those big players are obviously familiar with mining in the industry. I'm sure they're very familiar with your technology already to this point. You know, I mean, I guess in the long term here, Steve, is this, it will always be, mining and exploration will be your bread and butter. But as far as growing the company and if for future financings, do you need to make that leap into, you know, those larger known tech VC funds, you know, the Sequoias, the Andreessen Horowitzes? Like, is that the next step? Do you need to get there, or is that something like maybe you don't need to be there because you've already have such a foundation here within this niche sector?
I think you need to approach it sort of a question like that from what would you use the money for? And we're unique in that sort of we're growing right now. So we're our subscription revenue, so our recurring revenue, which is the metric that sort of is held above all else in sort of looking at a company of our stage. We're at it's up about 90% this year. So we're growing really quickly, and at this current, and what are we, 6 months into the year right now? We look at sort of our growth trajectory and sort of our business as it exists today, and with the capital we've raised, we'll get to a point of profitability. So what that does as a business is it just kind of gives you so much control over what your next steps are. So we don't really think about like, do we need whether it's as you mentioned, a Sequoia, or like who that partner is. It's more, we approach it more from like, if we can get to achieve profitability as a business today and do so without compromising growth, so we don't need to bootstrap ourselves over the next little while to get there, what would we use additional capital for? Is there a benefit to that? Because we're working within sort of a very defined market. There's sort of 2,500 to 3,000 companies. And the way we look at this market is it's beautiful because you know who to market to, you know who to go after, you know which people at which companies need to talk to, and you can have this real network effect. It's dangerous because if you screw up with one client, it's such a tight-knit market that can really, that the positive effect of and the additional business from a really successful client, you can apply that to if a client has a negative experience as well. So first and foremost for us, we approach our business from we need our clients and our reputation and what we do for people within our sector to just think we're the best. And additional capital doesn't really do that much for us there. That's more sort of training and everything else. So do we need more money or would we raise? I don't like to run companies that are underfunded. So sort of even today, like with our cash balance, we'll get there, but it's not like we're it's not like we're spending a bunch of money on new ideas and other things. So we look at it more like, are there opportunities within our sector that we would raise capital for, that we can have a step change in our business today? And that's kind of how we approach it. So I don't think there's actually like, we need to go into this pool of capital, whether it's VC or growth equity or mining companies or mining funds or what it is, to access the capital. I think, and we are looking at some really, really exciting stuff right now. I think if the business opportunity for us is right, I think you could approach any one of those pools of capital. Because if you're sort of looking at like, here's a business that's growing at 150% a year right now, and here's how we take it from kind of where we are today to bolt on this other business segment or this other element that sort of leverages the business we're already building. I think that's exciting for any investor. So we'll always look at opportunities like that. Yeah. We're entrepreneurs, and that's how we approach our business. But yeah, it's not, I think that my own view is that an entrepreneur and how we run it should just run a business focused on making it a successful business, versus when you start to try and get into the heads of your potential buyers of your business or the potential funders of your business, they're dealing with so many other components. They don't know where they're going to be 6-12 months from now. And ultimately it can really cloud your sort of focus on just making your business successful.
Steve, this is probably a really good time. I know there's a couple things that you wanted to share, some new developments in the VRIFY platform. I mean, this is going to be nice and visually sound for the video YouTube channel. People on the podcast, maybe I'll put a link here of the YouTube in the show notes so you could potentially see it, and maybe you could just narrate as much as you can as going forward, Steve. So we're going to let you just kind of share your screen and walk listeners and viewers through some of the latest developments here.
Yeah, sure. Let me share my screen here. You always get nervous when you share your screen, and
right.
Make sure you're not sharing the wrong tab.
Just share the one with the bank account, Steve.
Yeah, exactly. You see that?
Sure can.
So I think I may have showed you this before. So overall, kind of VRIFY, that we sort of, our view at VRIFY is that you have an entire sector, like the entire mining industry, both mineral exploration and mining, the extractive side. Every element of it is just kind of going through life with 20 to 30% understanding of what they're actually doing. And it doesn't mean that the people kind of doing the work don't understand what they're doing, but the way that they communicate that to other groups, whether it's to investors or to stakeholders or so on, is this kind of take everything, all this complex information, screenshot it, put it into a PowerPoint that few people really understand, and then just kind of pat yourself on the back and keep going. And when you do that, it's like, if I'm sort of a PhD with a coding background trying to talk to you, but I make a choice to only use very technical words through this conversation, you'll walk away from the conversation probably nodding your head because you want to be polite, but just not achieving anywhere close to the level of understanding that you need to understand what I'm trying to tell you. And we just believe at VRIFY that's how the entire industry operates. In some ways, we're almost too polite. And like when we look at the traditional mining company or mineral exploration company pitch deck, it looks a lot like this, where you have kind of, here's a cross section, here's a plan map, here's another cross section, here's a chart with 1,000 different numbers on it. And what do you think? Do you want to invest? And I'm oversimplifying here, but take something like this cross section. It was really interesting going through this tech financing because I was meeting with non-mining investors, and I would use these examples and I would ask a lot of questions like, have you ever invested in mineral exploration before? And right across the board, the answer is no, because they don't understand it. So having a pitch deck of things like this is this big blocker to people investing in our sector. And just because that some people might understand it doesn't make it okay. So how we've approached our business to date, and this might be one of the things, Trevor, to be honest, that we look back on and be like, I can't believe we used to do it this way, because there's an even better way to communicate what we do. But how we approach our business to date is just by showing, like, instead of having a slide in a deck that's here's a cross-section, it's showing first off what a cross-section is. A cross-section is a slice in this project, and this is a project that sits, and you can kind of see from the topography that it's an older mine set. It's a pre-existing mine site. So that's where the cross-section sits. And all this company wants you to know with this cross-section is not what each color means and everything else. Just that between these two dotted lines, there's a bunch of mineralization. So kind of it's 200 meter wide zone where mineralization in this project occurs. And if you look at sort of everything that they found on this project to date, it all sits within that 200 meter wide zone. And all this company wants you to know is that whoever was here before them was drilling this target, and they called it the milestone target, and these white things are drill holes. And when we look at all the drilling that they did here in the past and we compare it to that cross section, it's very obvious all of a sudden that they didn't drill deep enough, because all that drilling stopped right here, and down here is where they're going to find all the good stuff. And ultimately, all we're trying to do at VRIFY is arm people with tools that allow them to take content that looks like this and just make it make sense. Because now this company, when they're showing somebody this, all they need to tell an investor is, now that you understand this image, what you need to know is that we're going to mobilize some drill rigs. We're going to drill down into this area right here. It's easily accessible. And in the next 4 to 6 weeks, we'll have results from this target. In which case, like if mineralization occurred right above it, it should be there. The high grade zone should be sitting below it. But ultimately, that's what everyone's trying to achieve, whether it's an internal pitch to get your budget approved to a community group so they understand your project, or to an investor to get excited about. This in itself, sitting as a slide in a deck, does not get anywhere close to achieving that. And in our business as a whole, we view it as taking very complex information, and actually, instead of just sort of going through like, I need to add more complex information so people know how kind of serious I am and how well we know this project, taking a step back and actually thinking like, how does the person across the table, whether it's a community group or an investor or sort of my own board of directors, how are they taking this information in? What level of understanding do they have? And what do I need to do to communicate that to them in a way that they can understand and make a decision on? So that's our business today. One of the things that I wanted to show you is we're playing with right now. Take all of that complex information that I showed you. Like you've got every kind of company has geology maps and sort of geophysics and all kinds of technical information, and then they use that and they spend their time with investors explaining that. And geophysics as a whole is a great example. So geophysics, you often you create this rainbow colored heat map and you put it on a slide in a deck. But to be honest, for an investor to understand why this colorful rainbow map matters to them, they'd have to be a geophysicist. Because for one project, the red highs might be important. For another project, the blue colored lows, like the low signature, might be important. For another project, the contact zone between the blues and the greens might be where mineralization occurs. But the map itself doesn't actually do anything. And sitting there and sort of in a room full of people flipping through a deck, it just doesn't achieve that. And
you're talking about the geophysical data here.
Yeah, like say like something like, and I'll just use this example. This is one of our clients. Really interesting, really cool project actually. But like, look at this type of map. Like very few people can look at something like this and all of a sudden understand why it matters to them. And some of that is just like our brains aren't meant to digest that information in that way, but it's not our expertise. And what we get really excited about and where we're moving towards at VRIFY is just this idea that we're going to reinvent how people actually show information. And what I mean by that is take a project like this. So instead of putting on geology and geophysics and all of these other things, what if we just turned it into a heat map where targets are a brighter color than non-targets? And we went through, and each target was simply kind of, here's the target, here's our prospectivity score, whatever we want to call it, here's when we're going to be drill testing it, and here's when we have results. And This is not geophysics, this is not geology, this is not geochem. This is taking all of that information and just putting it into a simplistic format that somebody can say like, oh, that's a really exciting target. I can't wait for you to drill that. And if somebody wanted to dig deeper, all of that other information sits below the surface. I'm convinced that 90% of investors will not go down to find out sort of geology, geophysics, everything else, because it's not doing anything for them in the first place. And if we can take information like this and just show it in a way that makes sense and ultimately tag a catalyst onto it, so you have not only an exciting target, but a timeline for when sort of news for the drilling of that target will take place, that in itself, you've taken sort of the 45-minute complicated mineral exploration pitch and turned it into essentially a 2-3 minute exercise. And by doing so, if you think of the typical investor meeting, you've gone and freed up 42 more minutes to talk about your company and other elements versus trying to pretend that everybody knows what these geophysics and geology maps look like. So
Steve,
this
let me, sorry,
yeah,
I want to ask you, this is a really cool feature. For me as an investor, I love it. The other side, the other side of the sword here is I'm wondering if this is almost, does it create so much accountability for the company here? Because I know there are a number of companies that will drill something and say the market's not there. They're going to hold on to these drill results. Maybe they're not material enough to where they have to, but they're going to hold on to it. And if the expected date of drilling and then the expected date of the assay results are up there and we're well past that time, I mean, there is a big accountability factor here with this data set, and I love it. Me as an investor, I love it. I could see how maybe some companies, given the variables of the market or even the workflow on projects, maybe wouldn't like it.
Yeah, so it's a really good question. The honest answer is we're never going to introduce things like this or kind of change behaviors without sort of rocking the apple cart a little bit, right? Like there will always be, and there will be groups who look at this and say like, I don't, to your point, that sort of doesn't work within sort of how we like to operate our business. That's just the reality. There's no way that we're going to be able to kind of introduce behaviors like this to 3,000 companies and not have some not like it. We make our business decisions on sort of what you said at the first part there. Is this beneficial to investors? Ultimately, the investors own kind of the bulk of these companies. If an investor looks at something and says like, this would help me in sort of my investment relationship or my investment decision-making process with this company, then we're doing our jobs. And ultimately, the investor is the owner of this business. So we're going to do everything we can to kind of create tools. And what you're going to see is you're going to see a lot of companies sort of flock to that, because if they see something that allows them to better kind of not only improve their relationship with existing investors, but help bring in new investment dollars, that in itself is what I would say 90+% of these companies are looking for. And if you're not, that's I guess a choice you have to make. We just view this entire exercise as like, I think the bias that I bring to it is I used to run one of these companies. I actually really believe in sort of the value that our industry can create. And we live in a world that's kind of waking up to the fact that minerals don't grow on trees. So kind of we need these things. There's this huge opportunity right now to kind of reinvent ourselves in a way that the average person can understand what we do as a sector. But our answer right now to that is like put a picture of an EV, an electric car, in a PowerPoint, or just talk about sort of how we're going to run out of copper. Those are big, important macro things, but we're not actually doing anything to prove the level of understanding down at sort of an individual investor to company basis. And I think that's what we really need to work on.
Really cool stuff here, Steve. When do you expect that to be rolled out? And what's the user experience been? Have you user tested it?
No, you're actually the first external person I've showed it to.
Oh, really?
So yeah, so it's just and it's a big part of what we do at VRIFY. We're always sort of testing new ideas and so on. So like based on your reaction, yeah, we'll roll it out tomorrow. It seems like it's.
Hey, you just told me you jump the gun sometimes when you see people get excited. So.
Yeah, well, the one thing I've learned in doing this is there's such a gap between sort of idea and execution, and we've just learned that like we I think at VRIFY, we have like this endless, we have no shortage of ideas, right? Like if we had unlimited sort of development, like computer development resources and everything else, we could build so many cool things. So when we look at something like this, fortunately, we've already built the platform. So to roll something out like this is more like change management of it's dealing with our clients and our customers to like, is this something that you think would be beneficial, and then work with you to implement it. But it's actually like, fortunately, from a tech perspective, dead simple. It's more kind of like presenting to something like this versus what a company currently presents to is very different. So what we'll do is in the next few weeks, we'll just kind of work with a few clients, kind of see what this looks like, set them up to do it. We have a lot of clients that love just testing new ideas. So we'll kind of grab some of those and then gauge the response. And if it works, we'll roll it out. If not, we'll tweak and so on. But you can expect to start seeing presentations of the style, I'd say, in the next month or two.
I kind of want to tie this into, VRIFY. And you mentioned 2022 was a pretty challenging year for VRIFY because, markets and junior exploration was really stuck. I mean, 2023, at least the equity markets and junior exploration, they appear to be stuck as well. I mean, how does this correlate to growth potential for VRIFY? I mean, is this something you're keeping a very close eye on?
Yeah, and when I say 2022 is tough, it's because we found ourselves at a moment in sort of our kind of the evolution of VRIFY. We just found ourselves at a time when we needed to raise capital, and sort of the finance markets, not just for junior mining or mining, but for tech companies as well, was really tough. We're the correlation right now, and there's a lot of other factors, but sort of as tough as the market is, like our business is growing kind of quicker today than it's ever grown before. June 2023 was the best month we've ever had. Wow. And I think a big part of that is like as your sort of communication budget and comes under more and more scrutiny, you need to look at tools that you can measure their effectiveness for. Where in the past, and I've done this running a company, it'd be like, that's a cool idea. Let's put $50,000 towards that sort of concept of kind of advertising on this platform or whatever it is. And I think as things become more and more, I guess as every part of your budget comes under more scrutiny and companies get really, really tough, but what is the value of each additional tool that I'm using or initiative or partner, whoever I work with, to kind of get my story out there? I think that's where VRIFY is, like, as we continue to work at this sort of metric of creating successful clients and companies, that's where we start to really kind of separate from the pack. And a lot of our clients that use this effectively say, like, we will literally drop every other part of our entire budget before we would drop VRIFY, because it's sort of the underlying core to what we do. Whereas like there's a social media firm that does this, but I can actually use VRIFY to produce 2-minute videos, and then kind of I now control my entire social media strategy myself without having to pay for additional things. So I'm personally really excited. I'm an eternal optimist. I always think sort of the next bull market's a day away. I'm excited to be in that space because I think it'd be really beneficial for our business. But like what for us, where we'll just continue to double down and triple down, is just in ensuring that every client that we work with is successful. And in doing so, I think there will always find space for us. Like the one sort of universal truth to our sector is that companies need more capital. And for the very, very few that don't need more capital, they still want higher share prices. So it doesn't matter what the market is, they are always looking for more investors. And that will never change. And ultimately, to be honest, no one's ever happy with their share price. They always want it to be higher. It doesn't matter what market you're in. And that's sort of the problem that we're trying to help companies solve, is like your valuation is X and you want it to be X times whatever. I can guarantee it's higher than what it is today, is what you're striving for. So we build our product in a way that can support companies achieve that. And that's sort of that. I need to raise capital, I need a higher share price, I need more volume, all of those things that involve you sort of finding more investors and building into those investors you already have. That kind of transcends market conditions, because that will always be there regardless of what state the market's in at any given time.
I do want to kind of address and provide a question here. There's a little, I guess you could call it an elephant in the room type of thing. I've heard rumors that VRIFY is interested in going public. I have my own opinions about this. Is this something that you've been approached or you're considering?
Not to deflect, but so my own background running a public company, love it. Like I really, really enjoyed it. We were fortunate because we sort of had this beautiful company that whenever you needed a press release, you just go drill a hole and it would just magically appear with these incredible results. So I would say my public company experience is quite biased to the positive. We don't, to be honest, we just view it as like a going public decision for us, fortunately, because of our own experience in running public companies. It's not a big intimidating step for us. I find it fascinating how tech companies view going public as like the exit, whereas I would sort of view it probably more in line with how the mining sector and mineral exploration views it as just one step along your journey. So at any point in time, we might consider that, but we would approach it from like, what are the benefits of going public? Is it better access to a lower cost of capital? Does it sort of provide sort of a more of a marketing platform for us to be sort of sitting there in the public company arena alongside our clients? And is there a benefit to that? We don't view it as, hey, over the next 12 months or by this time, we want to be public. As we stand today, if we were to say, let's go public next week, that'd just be a big distraction for us because we don't need the capital from it. We have sort of a strategy that works as a private entity right now. So not to say that we won't do it. Going public to me is like I think in the tech world, you view it as this massive, big event. To me, it's like we might find an opportunity and one day be like, look, let's go public. And it's a 3-month exercise and we're public. Right. But we wouldn't view public, but personally, I wouldn't view public as like it's our exit strategy for everyone. We would like, it wouldn't be sort of new team or anything else if we ever did it. It would just be like, look, there's an opportunity to be public and we think we can get a better valuation or there's a reason to do it. Let's do it. We do have a lot of shareholders that have been with us for a long time and we're very appreciative of those. So that's the other side to it is like just ensuring that sort of we listen to all of those shareholders. And if it's something they want, if going public isn't in the near term horizon, then what are other ways we can provide those shareholders with liquidity or help them with what they're looking for as well? Yeah. Right. So I don't know about the rumors. I don't know where they're coming from, but yeah, I always love rumors.
Well, and honestly, I have had experience with a Canadian traded, basically for lack of a better term, technology company, and it was really tough. In fact, it actually absolutely failed because you get valued differently, right? It's more, there's real numbers. It's not just, in situ value of holes in, of deposits in the ground. It's actual cash generation and where it's coming from. And it just opens up a bigger can of worms. So I'm glad I asked and I'm glad that you could answer as best as you can. And to be honest, I think again, like because things turn on a dime, like the public markets might turn around and sort of a month into that turnaround, it's like, wow, look at the valuations of public companies. Let's go tomorrow. Right. That may happen at some point. We're not in that market right now. Yeah, exactly. All right, Steve, thanks for doing this. I'm glad we could connect, and best of luck with the rollout of the new things within the platform. I look forward to watching for those targets. I think it's really cool, and again, we'll see how the companies feel about it. I think there's going to be a little bit of discrepancy, but maybe you can share some of your thoughts over a beer sometime. Yeah, well, it'll be fun regardless, right? Thanks for taking the time. Yep. All right. Always good to catch up. All right, everybody, that's a wrap here this week on Mining Stock Daily. Paul Harris has got you covered all week next week, and I'm off to the East Coast. Have yourself a great weekend. Be well.